Hey guys, first and foremost, I wanted to thank Skillshare for sponsoring this video. If you're unfamiliar with what Skillshare is, it's an online learning community with thousands of classes for creative and curious people. I mean, it's everything like, especially as a content creator. I know many of you who do kind of tune in also have channels and or have creative hobbies or jobs or skills that you utilize to make money, to help you invest more money, or your day job is technical, that you could always use some more information to learn a little bit more. Skillshare, it has everything from animation, film, and video, where you can learn to edit videos better, art, graphic design, illustration, music, photography, UI, UX design, web development. Me personally, I've really enjoyed the Adobe Premiere Pro courses by Jordy Vandeput. Really does help me with my own video editing and learning Adobe a little bit better. So what I'm going to encourage you to do is go down below, use my link, go sign up for Skillshare, and get better at something. Hello everyone, welcome to JMac Investing. My name is Jason. Thanks for tuning in to another one. This one is going to be, I'm taking a little bit different approach here. I'm actually going to talk about something I see that is a potential risk for some of these companies that many of us are investing in and tracking. We should always, as investors, take a look at all of the positives and all of the potential catalysts that we like about the company. Well, you should also try to find some things that you don't like about the company that are negatives, or that may become negatives and may tap into the projected market share of said company in the future. So this is one topic that I have not seen anyone talk about. It came up in my private Discord. We've discussed it there, but I haven't seen anyone else discussing it. So I felt it would be a topic of discussion in a video here. So I'm going to present that with you today, because as we all know, there's been some little niche markets that have been popping up. There's been the space rocket ship markets and the satellite companies coming public. There's been the sort of the alternate food market and the pure play EV companies. There's also been the electric vehicle charging station companies, right? So so your ones that have come public via a SPAC so far are the biggest are Chargepoint, which recently changed their ticker symbol over to CHPT. Then you've got EvBox, which right now is trading under ticker symbol TPGY. And then you've got EvGo, and EvGo is trading under ticker symbol CLII. And then you also have Volta Charging, is the newest of the EV charging companies going public via a SPAC. That's trading under ticker symbol SMPR. Now, while these are all EV charging companies, they are at the same time all a little bit different. I would say that the two that are the closest in size and kind of what they want to do is Chargepoint and EvBox. Those are the bigger of the four ones that are coming public via SPAC. What we're going to talk about today is what could hinder these companies growing and expanding in the manner that they are expecting to. Because if we look over their slide decks, the compound annual growth rate expected from these companies is ginormous, is huge. They're getting applied multiples that are like tech companies. But what if there's some other players and different things that could happen that could totally not disrupt the EV charging space, but could completely keep Chargepoint, let's say, or EvBox from expanding the way they thought they would as they were coming up with their future plans and their growth plans? You'd want to know that, right? Okay? Yeah, of course you would, So that's what I'm going to shed some light on today. So I want to jump into what that reason is, and then I want to look at these four companies one by one. So that being said, what is the potential risk that could slow this whole industry down? Okay, so here's the headline. Stick with me here. Planning 500,000 charging points for EVs by 2025. Shell becomes the latest company swept up in EV charging boom. You heard me right.
one of the big oil and gas companies, Shell, is planning to or have charging points at their gas stations, 500,000 of them planned. Now you're putting that in context with like Chargepoint currently has about 130 some thousand, and EvBox I think has like 190,000. If it were today, and Shell had rolled out 500,000, that would be bigger than all four of the charging plays that we're looking at coming via SPAC combined. So one oil and gas player here, just one player coming into the market and setting up shop is going to be bigger than all of the other plays combined. So this is something to really keep in mind. Shell already has electric vehicle charging infrastructure that it has deployed in some markets. Back in 2019, the company acquired the LA-based company Greenlots, an EV charging developer, and earlier this year, Shell made another dive into electric vehicle charging with the acquisition of Ubertricity in the UK. And this right here says it all. The writing is on the wall, and investors have to take the time. There's been a flight out of the traditional investment opportunities in markets, said FreeWire chief executive Arkady Sozinov in an interview. There's been a flight out of the oil and gas companies and out of the traditional utilities. You have to look at other opportunities. This is going to be the largest growth opportunity in the next 10 years. FreeWire is BP, British Petroleum's arm of EV chargers. FreeWire deploys its infrastructure with BP currently, but the company's charging technology can be rolled out to fast food companies, post offices, grocery stores, or anywhere people go and spend somewhere between 20 minutes to an hour. So FreeWire is another player that's working with BP right now to think about. That's also so now as you start looking across the landscape, you can kind of see that is there going to be really one dominant player? Chances are it may be one of these big oil and gas companies, and that's what I want you to consider, because it hasn't yet happened so much in the U.S. But the moment Chevron or Exxon, which are the big U.S. based, or Marathon, one of those guys come out and say we're going to put EV chargers at all of our stations across the land. A couple things to digest with EV chargers, and I'm just I don't have data to back this up, but I'm just thinking logically about it. I want to say maybe around 90% of people are going to do most of their charging at home, and the only time they would need really charging network is when traveling further distances, more than a couple hours. And in most cases, when you are traveling, where do you go? You go to a gas station, or a gas station with a restaurant attached, for some fast food, or to grab a sub or something like that. Well, if these gas stations and these big oil and gas companies are going to put fast chargers at their gas stations, totally does change things, right? So, there would and could be the occasional where you forgot to plug your car up last night, and while you're at Whole Foods, you plug up to a Chargepoint or whoever is set up at that Whole Foods, or you go out to dinner or to a mall and you use the Volta charging while you're in the mall just to refuel for a little while. Especially Volta has the 15-minute free charging to start with. So I think there'll be the occasional use cases for some of these EV charging stations, but I want to say the majority of people with EV charging needs will be taken care of at home, and not when they're out and about, right? So because we're starting to get to a place in EV battery life where the range anxiety is not going to be as it was before with like the Nissan Leaf that could barely get 100 miles, 90 to 100 miles. Now, you're getting ranges of 250 to 300 pretty regularly on most of the new lineup of EV cars that are coming out. So this range anxiety is pretty much gone. So let's look at the different companies and see what their growth plans are and how it might affect them. EvBox has grown quite expansively across Europe, right? So now Shell's coming in across Europe, and blanketing the lots of all their gas stations with chargers. So EvBox actually is taking a little different approach, and they're looking to expand into the U.S. market. So as it stands right now, that would be a good move because Shell is encroaching in on the European market. So I think EvBox right now with their expansion plans is looking okay until, like I said, if one of these U.S. Big oil and gas companies decides to step in. Then if we take a look at Volta charging, I think they're going to be kind of sheltered from this as well, just because they have a complete different business model than the rest. They're going to focus on basically having advertising built into their chargers, and they're going to be in high profile places like at malls. They're always making money on the advertising end of things. So I think their business model kind of hides them from some of this, and I think because of the prime locations that Volta is at, they're also going to be a little bit sheltered from some of this, and I kind of like their business model over all of the rest of the players, honestly. Then if we look at EvGo, if you are unaware, like EvGo, their real big push is to have DC fast charging stations, so the real fast chargers. And they don't have as many charging stations. The ones they have are fast chargers, and that's going to be the ones that, when people are on the move, those are the ones they're going to be looking for. But they have a good business model as well, because they're looking at, again, premium site locations, fleets, which is going to be a big need. So with fleets, that's definitely going to have you sheltered and away from it. Government as well, which is similar to fleets, and utilities. And so they visualize it here, and they show some gas stations that they're partnering with. So they may actually be ahead of the curve here, EvGo, and they may actually be the ones putting in some of these stations and benefiting before it ever even takes place. So another one that could kind of weather the storm, even if it did occur in the U.S. One of the big players came in. And then unfortunately for most, because I think most people, and I personally too was at first as the most bullish on Chargepoint and its plans, because they hold about 70% of the market share in the U.S., although there's been some who have debated that as well. That's their claims anyway. But Chargepoint's goal from their expansion plan is to expand out of the U.S. and into the European market. I think Chargepoint is the one most at risk because of this. Them and potentially EvGo, the bigger players here, are probably more at risk because they don't have a niche strategy within the EV charging industry. So time will tell, but this is something I did want to bring up and put on your radar just to kind of mull it over. Not to scare anyone off. I'm not saying this is going to affect any any of these companies probably near term, year or two, but in the European market now, this really could show up and rear its head pretty quickly with Shell as they roll out that many stations in the European region. So it's something to consider, and I just wanted to, like I said, put it out there as more of a warning, and just to have you all kind of thinking outside the box when you're thinking about how you invest, so you can take your due diligence to the next level. If you find this is maybe providing you some value, do me a favor, hit the like button, subscribe if you haven't already, turn on notifications, and also consider joining my Patreon group, patreon.com/JMac Investing, an awesome group of investors where we break down SPACs, we come up with and discuss issues like this, and break SPACs down as they are announced. Come on over, join the private Discord. Got limited space there, so just keep that in mind. Also, pick up some free shares from WeBull, Mumu, or M1 Finance down in the description below. That's all I got till next time, guys. Have a great one. Deuces.